The big risk to not just consumers in the short term of the energy prices, but it's that is the big risk on the inflationary outlook into the next year, is that energy price shock.
It's not just the energy also, and that's important, there's no doubt, but it's also wages, because do remember the industrial relations bill that's just been passed through our parliament is deliberately designed to increase wages. And Philip Lowe, the Reserve Bank Governor, has warned about this, the wages outbreak. And the problem is, once wages start to rise to try and catch this inflation rate, the inflation becomes more sticky and ultimately will lead to the Reserve Bank raising interest rates even more. Then go to Andrew's point about mortgages and the impact on households, because remember, this is deliberately designed to curb the spending inside households and therefore spending. We can show you the impact of a 0.25% rate rise on people's mortgages. So I just want to take you to that, because it gives you a sense as to where the mortgages have come from and where we're going to into the future. Because what it really shows you is the impact on $1 million mortgage, say, for example, pretty typical in households now trying to get themselves into the housing markets in the major capital cities. The impact is $151 per month. Now, if you make the cumulative effect of all of those increases that we've had so far this year, that works out that that family needs to find an extra $20,000 per year after tax. And a subsequent problem is all of those people coming off fixed rate mortgages run straight into that as soon as they come off those fixed rate mortgages. So here it is here, $1 million mortgage, $151 per month or $1,668 per year, best part of $20,000 per year after tax that family will pay. $750,000, take it back to that, you're still talking the best part of $17,000 that somebody with a $750,000 mortgage is having to pay. They've got to find that money, and really this is the reason why ultimately spending will be curbed.
Yes, and at the same time we heard in Ed's discussion there with Bisa at the RBA, Andrew, this concern around the potential for a wage price spiral at the same time the government's trying to drive wages up, Andrew.
Well, Kieran, I think there's going to be a lot of debate, and that's why I raised the ABS figures in our program yesterday about whether the government needed to do more to introduce multi-employer bargaining, because it appears with the inflation and with the shortage of labour problems that Australia has, wages are going up regardless. So, it's going to be a really interesting test on the IR front for this government, whether this bill crashes the economy. I don't want to be too dramatic about it, but there's that potential there, I suppose. If you've already got wages going up at a decent clip and you introduce industrial relations measures to see them go up even higher and significantly higher, doesn't that just push up inflation? And can that crash the economy? Because the Reserve Bank has to respond to that. So, look, on the economic front, it's a massive year up ahead for the Albanese government on IR and on energy.
Yep, no doubt about it. And as Ross has already touched on, that sort of lag effect for households. And there's been a bit of a lag effect when it comes to wages. There was a view that you get to full employment, wages will rise. They didn't, but they are starting to now, Ross, as Andrew suggested.
Yeah, that's absolutely right. And remember that this has already been pointed out by the Governor, Philip Lowe, who can be criticised for many things, but on this, he's absolutely right. Ultimately, the wages do create the inflation. But then go to the statement that he's made today about inflation. And I think we've got there. This shows that the Reserve Bank remains determined to fight that inflation. And this is what they've basically said. Inflation in Australia is too high at 6.9% over the year to October. Returning inflation to target requires a more sustainable balance between demand and supply. But stay with that. Inflation in Australia is too high. Remember when inflation came from 7.1 to 6.9%? A lot of people said, well, it's all over. Inflation is disappearing. And what's going to happen is the Reserve Bank will now ease off. And many in the markets anticipated that this would mean the Reserve Bank would keep interest rates from here on hold. Well, it hasn't. And it's shown here the determination to keep raising interest rates. So this statement is no backing off or easing back from their determination to continue to raise interest rates to quell that inflation as well.